This is the Asia Trade. I'm Shery in Tokyo.
And I'm Avril Hong in Singapore. Your top stories this hour. Asian stocks set to track U.S. optimism after Wall Street closes near another all-time high. Bets are growing that the Fed will cut rates this month. Traders digest the upheaval in France and Indonesia after the French premier moves to resign and Prabowo replaces his finance chief following recent protests. As Japan's LDP leadership race heats up, we speak with a former minister that could be one of the contenders to replace Prime Minister Shigeru Ishiba. Shery.
Take a look at how Nikkei futures are setting up. Not doing much after gaining to a 3-week high already. We are seeing broader Asian stocks now continuing to gain ground. We are talking about 4-year highs. We have seen the Japanese yen, of course, weaken against the U.S. dollar after the announcement of the resignation of Prime Minister Ishiba. In the overnight session, though, the Japanese yen did manage to rebound and really reclaim most of those losses that we saw after the announcement of that resignation. We have seen the offshore yuan also gain ground for the past 3 consecutive sessions. Of course, we continue to see a weaker U.S. dollar. Take a look at how U.S. futures are setting up, because the dollar also got a little bit of a boost after, actually got a little bit of more downside after the euro gained ground on the other side of that trade as well, after the French Prime Minister lost that confidence vote. Right now, we're seeing U.S. futures gaining 0.1% after touching record highs already. Of course, we are watching Apple because of that product launch, and we're also watching the euro, as I mentioned, 117 is your level, but it's really about the yield curves around the world that we're watching. The 2-year yield at the lowest level since 2022. Of course, expectations that the Fed will cut rates, a key mover right now in markets as we await inflation data, and we got the Fed decision next week as well, Avril.
Yeah, Shery, and we continue to monitor political upheaval around the world as France's Prime Minister prepares to submit his resignation after losing a confidence vote. Traders digesting the departure of Indonesia's finance minister. Let's bring in Bloomberg senior editor for markets, John Authors, and our Southeast Asia global business reporter, Faris Mokhtar. John, let's start with you. Bayrou losing. Now we're seeing another change in government in France, I think the 3rd in a little over a year. What is next for the country?
Well, the next is probably yet more of the same, which is more of a muddle through, probably until Emmanuel Macron has to step down as president, which is in the spring of 2027. He's highly unlikely to call another election to break the impasse, because he's highly likely to suffer even worse political losses if he does so. And it's not clear that he would that anybody else is going to do a significantly better job. So I think the betting has to be that we continue to try to muddle through with a budget that isn't as austere as it perhaps needs to be, but that can just about put together a majority in the French legislature. It's nothing great. It's a very unfortunate, very unhappy state of affairs. But it's probably the case that crisis is still a way off, and obviously, if rates are coming down in the US, that makes life easier.
Is that why we're not seeing such a drastic reaction in the markets, whether it's the euro or the French spread over German?
Yes,
booms? Yeah.
by quite a margin. The US, little though we like it, and little though the president would like the US to continue to be quite so central to the global financial market system, it still is. While rates were high, I'm not saying I disagreed with how high they were, but while rates were as high as they were in the States, it was that much harder to limit the kind of very sharp rises you've been seeing in French bond yields, and also at home with British gilt yields. Both of them came down very sharply the last couple of days, even though the political crises in both those countries actually got worse. You can't explain that other than them, because people are very relieved that they think the Fed is going to make life easier next week.
As you say, politically, I think things are muddling along. What is your sense of how there could be potentially a prevention of further worsening of the budget deficit in France?
I find that quite difficult to see, because Bayrou, to his credit, really did float quite quite an aggressive but still not ridiculously tough budget over the summer. It involved doing things that are really politically very difficult to do, such as fiddling with retirement ages, and it went down like a lead balloon, and he lost his confidence vote. So the idea that we might get some kind of trimming of the sails to help get through for another couple of years, that's possible, I suppose. The kind of really significant structural change that might convince the markets that they're comfortable with this and that might gain popular consent, that's not happening. And that wouldn't happen if they had another election, I doubt, either. It's just not going to happen.
John, great to get your insights. Thanks so much. Bloomberg Senior Editor for Markets, John Authors. Now turning to the latest on Indonesia after its finance chief was removed from office. Faris, let's bring you in. Talk us through why this cabinet reshuffle happened. Why was the finance minister that's seen as a guardian for fiscal discipline, why has she been replaced?
No, you're right, Avril. So, it came as a complete surprise. No one expected it. It came out of the blue. It was definitely done in haste. If you look at the comments made by the new finance minister, he shared with reporters that he was appointed. He got the appointment at 1 p.m. on Monday, and the announcement was made 3 hours later. And what this signals is definitely a reaction to the deadly protests some 2 weeks ago. Clearly, President Prabowo Subianto is trying to show Indonesians that he's learning, that he is trying to take action, and he's trying to course correct in a way.
The new finance minister will really need to try to calm global investors, provide some soothing voice out there. What can we expect from Sadewa?
So from the new finance minister, there are lingering doubts. He doesn't have that much of a standing compared to the former finance minister, Sri Mulyani Indrawati, who has stints in the World Bank. But the new finance minister is there are also some positives. He's a trained economist. He has worked under a senior minister in the Jokowi administration, who is arguably the most effective minister in Jokowi's cabinet. That gives him some standing domestically. But the key test, and probably the biggest test, is whether he can guard fiscal discipline in Southeast Asia's largest economy. And it comes as you have a president who has ambitious policy plans, which require a lot of spending. Now, his test would be, how do you balance that? And what the investors, what markets are worried about is, can he hold firm, or will he bow down to the pressure of the president?
And how important is all this going to be when investors look at overall Indonesia's investment economic prospects?
Now, if you look at the market reaction on Monday, it isn't really that drastic, but it's also because the announcement was made late afternoon. I think the markets, investors are still processing the news. What's going to happen from now on in the coming days, in the ensuing months, is that the finance minister, his comments, the president, his comments, and also the government's movement so far will be heavily scrutinized. Will this mean, greater loosening of fiscal discipline? Will this mean more borrowing? Will this mean, raising the budget deficit and debt? That is something that is going to be heavily scrutinized, and I'm sure that you would see some market movements in the coming days.
Bloomberg Southeast Asia global business reporter Faris Mokhtar there with the latest from Indonesia. Of course, we continue to follow the political uncertainty here in Japan as well. Avril, we are headed towards the leadership vote when it comes to the ruling LDP. And we are expecting a date to be set today. Local media have reported that it could happen in early October. The potential contenders is the key question right now. Sanae Takaichi, a hardline conservative, continues to come up as one of the favorite in leading polls. And we know that she narrowly lost to Ishiba in the last leadership election last year. She's known for wanting easy money and for perhaps reversing to Abenomics. Also, another contender could be Shinjiro Koizumi, the agriculture minister and the son of one of Japan's most famous premiers, Junichiro Koizumi. He's only 44 years old, so he could represent a new generation. A sort of, will the LDP go to the side of right-wing voters, or will it try to rebrand itself as a younger, fresher party? Of course, is a key question. And you can see right there a number of other contenders, including the chief cabinet secretary, former defense and foreign minister Kono Taro, and also the finance minister there.
And Shery, as we wait to see who these top contenders are likely to be, let's recap as well what's at stake for financial markets. If you take a look at this chart, it'll show you how among major markets, Japan's yield curve is the steepest among some of them. And if we see further political uncertainty, that clouds the outlook for the BOJ's rate hike. That could also mean yields on the short end are pushed down further. Upward pressure, of course, on the long end, as we've been seeing recently, given inflation concerns and this high government debt load. Add to that whether the markets can absorb the supply. Don't forget, this week, tomorrow, in fact, we have a 5-year auction, which investors will be watching the results of. And in the next couple of weeks, 20 and 40 years to keep an eye on as well, Shery.
And the thing is that no matter who wins this leadership election, is that probably nobody will be as fiscally hawkish as Prime Minister Ishiba. And even if they were, they need to negotiate with opposition parties, which might lead to more fiscal spending. In fact, we'll have a potential contender for that race, former Japanese Foreign and Defense Minister Kono Taro, joining us to unpack the political dynamics here in Japan. This is, of course, outgoing Prime Minister Shigeru Ishiba prepares to leave office, so don't miss that conversation.
In the meantime, some other political stories we're following. Former Thai Prime Minister Thaksin Shinawatra has returned to Bangkok, ending speculation he had fled the country ahead of a court ruling that could see him jailed. Local media reported that Thaksin was seen emerging from a private jet terminal on Monday. He abruptly left Thailand last week for what he said was a medical checkup. And Argentina's major assets plunged after President Javier Milei's party suffered a landslide defeat in a key provincial election. The Argentinian peso slid as much as 7% when local markets opened before paring some losses, while the stock benchmark tumbled 13% to mark its biggest loss in 5 years. The benchmark 10-year government bond also slumped, with yields surging to just below 13%. The election loss in Buenos Aires has raised concerns that Milei lacks the political support needed to sustain his plans to overhaul the economy, Shery.
And coming up on the Asia Trade, we'll be talking markets with Capital.com. Creative Strategies explains what to expect from Apple's iPhone 17 launch. And the University of Sydney joins us to unpack tensions around immigration in Australia. We have much more ahead. This is Bloomberg. Take a look at how futures are setting up for the Asian session. Of course, we have seen Asian markets at a 4-year high already. Nikkei futures at the moment not doing much after gaining ground to a 3-week high already. We're following U.S. futures higher by 0.1% after rising to a record high. And usually September is a weak month traditionally, but Bloomberg Intelligence saying that if you see the Fed reducing rates, the S&P 500 has gained 1.2% in the month when the economy was not contracting. So perhaps we could see more gains from here is a key question. But of course, not all analysts agree. Avril, JPMorgan thinks that we could see a drop in U.S. stocks if the Fed cuts.
Yeah, as markets price for this Fed cut for September, JPMorgan says that the meeting could turn into a sell the news event, Shery, and the bank's trading desk has maintained its lower conviction tactical bullish call while pointing to a number of risk factors. This includes inflation, jobs, the trade war, and they also noted retail investors typically scale back their participation in September. So that seasonal weakness you just highlighted, while fewer corporates have been buying their own shares. Meantime, we have the Goldman Sachs CEO, David Solomon, signaling there's no need for the Fed to rapidly cut interest rates. And this is diverging from the Trump administration's pressure on the Fed, of course, to loosen monetary policy. And Solomon says he doesn't feel like the policy rate is extraordinarily restrictive when considering risk appetite, and added that investor enthusiasm in markets is currently at the exuberant end of the spectrum. As for the bond markets, Double Line Capital's Bill Campbell argues that the yield curve has further to steepen if the Fed unleashes aggressive rate cuts. And they expect easier monetary policy to encourage risk-taking in credit markets, at least in the short term, while doing little to shore up rising long-term yields. And Double Line also says that potentially extends the runway for risk assets to continue trading at these very rich valuations, Shery.
April, let's get Kyle Rodda, senior market analyst at Capital.com, to share his views on where the markets could go from here. Kyle, great to have you with us. Of course, we talked about these rich valuations. What could really prompt a pullback here?
Well, I mean, the most immediate risk is probably the inflation data this week. I think what can be said is obviously valuations don't tend to be a very good timing indicator, but they do give a good indication of when the market is going to be prone to shocks. So that's, the most immediate risk. But I think if you sort of zoom out and sort of look at why the markets are continuing to float around record highs despite these concerns about the labour market, is that there is the sense that the Fed is ahead of the curve more or less in lowering interest rates and will be able to sort of buffer the economy, therefore earnings as well, and that stocks are still a decent buy. I think the really big sell-off will come if we see that the labour market continues to decelerate, that as a result the markets are forced to start to price in earnings downgrades or re-ratings. And as a result, we've got the S&P 500 forward price to earnings multiple, give it, say, 20%, give or take 5% above its 10-year average. That suggests there's a lot of air that could come out of the market. So, for me in the short term, we see corporates outperforming the markets, again, buying into this notion that the Fed's ahead of the curve. It's kind of a buy-the-break dynamic. That's for short-term traders or a tactical point of view. But if you look at a longer-term perspective, very risk-rich valuations in a market that's prone to shocks, especially a shock from a labour market that's, again, decelerating significantly.
Kyle, any asset to hedge this volatility, especially in a rate-cutting environment?
Yeah, I think it remains gold that's the best play here. And, a part of that is a rate cut story. It certainly has been. I think we had a good 3 or 4 months of consolidation there, and the breakout was really driven by these rate cut expectations. It has to be said that, we're looking potentially at a 50 basis point cut in September based on rates pricing, and there's every chance with the recent voting patterns of the Fed that we might get a governor or two voting for a 50 basis point cut, even if the Fed only goes 25. But if you line up the factors driving gold, you've got the rate cut expectations, you've got threats to Fed independence and institutional credibility, you've got these concerns about fiscal policy across the world and whether, government assets are going to hold their value in real terms. You've got the geopolitical risk on the horizon as well, which is, really, really significant. And then you've got, this kind of change in capital flows driven by US trade policy. All of those are tailwinds. I think that remains basically the best play. Clearly, we're a little bit overbought here at the moment on a technical basis, but structurally, gold is the play for all of these, to diversify these risks and play some of those major tailwinds.
You talk about these fiscal deficit risks that we're seeing in global developed markets, the UK, France, Japan even. We have these political risks in Indonesia as well. To what extent do you think this chips away at the narrative, the thesis that there are alternatives aside from the US when it comes to assets?
Oh, there's definitely alternatives. The US is probably still the least dirty shirt in the laundry, so to speak. But, the thing is that we're talking about at the margins here. And at the margins, if we compare where we were 6 or 7 months ago to where we are now, effectively you've got a situation where US assets are a little less credible. The US fiscal position looks as though it will potentially deteriorate going forward. We've got, trade policy meaning that, the US economy could go through something of a productivity shock, certainly a negative supply shock, if not in the short term, then in the long term, meaning lower quality growth going forward. And then you've got other things going on as well, which is, still that kind of fiscal impulse. It might come through Europe, which, if we do start to see some settling down in the French political situation, will start to reassert itself. And I would also make the thesis too that eventually the Bank of Japan is going to have to get its act in order and hike interest rates. And I think that's going to have a bit of an effect on short-term rates in Japan, boost the yen, for example, maybe boost the appeal even further, especially if we get this fiscal impulse still coming through from Japan for Japanese assets too. So without a doubt, the US assets aren't being displaced entirely as the global reserve asset. It's going to take a long time to sort of unwind that one from, let's say, a de-dollarization narrative point of view. But things are shifting at the margins. That means marginally US assets will be less appealing, the US dollar will be less appealing, and then the TINA trade once again is gold, and I think that's going to be the one that sort of is a non-fiat play and the best play to sort of play all of these kinds of fundamentals.
The drivers for dollar weakness, talk us through not just about perhaps the erosion of the case for US exceptionalism, but also the Fed's path. How do you see that playing out into perhaps May of next year? Of course, that's when Powell will hand over the reins as Fed chair.
Yeah, well, that's back to the kind of, Fed rate cutting cycle that, very much depend on, obviously, the inflation path going forward and whether this kind of wait and see approach from the Fed is the one that, really should be stuck to, or whether, the kind of the Waller and the Dove camps are sort of, and their emphasis on the deterioration in the labour market is sort of more on the money. Obviously the concern here is some kind of stagflationary light scenario, which would obviously be very negative for the US dollar and US assets. But I think ultimately what we're seeing here is obviously not just a cyclical sell-off in the US dollar because of the expectations of rate cuts, but clearly a structural play here as well because of attacks on certain institutions and trust in those institutions, as well as probably a deteriorating fiscal backdrop, and again that kind of non-productive growth that's going to come through exacerbated by trade policy. Notwithstanding, there is evidence at the moment actually that maybe tariffs are going to offset some of the impact of the fiscal deterioration. The latest CBO data sort of fleshed that out. So once more, it looks more than likely that we're going to see that kind of deterioration in the labour market. The big if is inflation, where we get that stagflationary dynamic. At the moment, it looks like we're going to avoid that. Rate cuts come through, the dollar appreciates. Going back to stocks, they can probably remain well supported in that environment, again, albeit sort of somewhat vulnerable to shocks. So, that's kind of the lay of the land at the moment. And, it is that kind of mix of short-term cyclical sort of headwinds to the labour market, as well as, loss of institutional trust and what's going on from a fiscal perspective that just sort of continue to lead to those trends perpetuating.
Kyle, thank you for your analysis. Kyle Rodda is Senior Market Analyst at Capital.com. We'll have more ahead on the Asia trade. This is Bloomberg.
We'll be watching Asian sovereign debt to see if they follow treasuries higher. They kept rising with the 2-year yield now at the lowest level since 2022. And of course, we have been watching JGBs very closely as well. We do have the 5-year auction tomorrow. We do have also 20 and 40-year bond auctions in the following weeks as well. We'll be watching the demand outlook given the fiscal concerns here in Japan with the resignation of Prime Minister Ishiba. We are headed towards another leadership election at the ruling LDP. We have seen Japan's yield curve among the steepest among major developed economies, this at a time when we continue to see perhaps expectations of a delay when it comes to the Bank of Japan's rate hike decision. Some had expected the BOJ to hike rates again in October. We'll have plenty more ahead on the Asia trade. This is Bloomberg.
You're watching the Asia trade, and we're tracking, of course, when markets open in South Korea against the backdrop of news that the U.S. may propose annual approvals for Samsung and SK Hynix to send chip-making equipment to their factories in China. Sources say this would be a compromise solution aimed at preventing disruptions to the global electronics industry. For more, let's bring in our Asia tech correspondent, Annabelle Jolas in Hong Kong. Annabelle, let's start with the bigger issue. What is at stake here?
Yeah, well, the bigger issue here and what's sort of come into the light, really, over the past few days is what's called VEU authorizations, or validated end user authorizations. And having that designation in place from the US meant that names like Samsung, SK Hynix, TSMC could send equipment to their factories in China without seeking approvals each time. So it was sort of an ongoing rolling permit to continue sending supplies, gear, for instance, parts, spare parts, to their factories or their fabs in China. So those waivers seem to be working pretty well, at least from Korea side. For instance, we heard from a Korea official who once told us that having those authorizations solved really major trade issues, particularly when you've got companies like SK Hynix, like Samsung, that have really major operations in China. But those VEU authorizations, rather, were set to expire at the end of the year. What's happened, and what happened last week, is that President Trump essentially just tore them up, and now that set off more negotiations to try and find a solution that really has to satisfy the US, given they've got these heightened national security concerns, but it also needs to be amenable to governments. TSMC, yes, has sort of smaller operations, more legacy operations in China, rather. But particularly for Seoul, with, as I said, SK Hynix and also Samsung, two major companies that also have major operations in mainland China.
So is there a compromise here? What's the U.S. proposing?
Yeah, certainly that's sort of what the initial idea seems to have been. I mean, this is all based on sources here, so none of this is confirmed just yet. But what we've heard is that the US is looking at the idea of having annual export approvals in place. So what would happen here is that companies like Samsung, SK Hynix would essentially present a list, present quantities as well for what they expect to send to their sites in China. So that includes all of their equipment, all of their gear, all the parts that they expect to send to their sites in China each year. And so then that could be approved by Washington instead. So what we've heard is that, yeah, there's sort of a sense of relief, at least from Korea's side. Maybe it adds that extra burden. It's a lot more paperwork. It's more cumbersome, certainly. But at the same time, at least it does present some path forward for the country as well. But I mean, we know it's and you know, Shery, of course, better than many, but it certainly is that really delicate balancing act for Korea that needs to manage, on the one hand, its major trading partner, China, on the other, what has been historically its biggest ally in Washington.
Yeah, tricky relationship, right? Annabelle Jolas there with the latest. We're also following President Trump's Made in USA push, now hitting some speed bumps. Hundreds of people have been detained after a recent immigration raid on Hyundai and LG's EV battery venture in Georgia. It's exposed a contradiction in Trump's economic strategy, which relies on foreign companies bringing jobs and production to the U.S. Yu-Kyung Lee, our stocks reporter in Seoul, has been following the story and joins us now. Yu-Kyung, great to have you with us. So what does this mean for foreign firms investing in the U.S.? Because Americans would say, why don't you just hire Americans? How difficult is that to find skilled workers, but also get some good visa options for skilled foreign workers?
Yes, a lot to unpack in this event. This basically seems to have exposed one of the biggest challenges that the South Korean companies that are trying to invest in the United States are facing right now. And I think, first of all, it's important to note that these companies, the joint venture in Georgia that saw its workers detained by the U.S. immigration officials, are not up and running yet. This is still in construction, and a lot of workers are there to help the construction process and to install the high-tech battery machinery and equipments before the factories go up and running. So based on how Korean companies have operated typically in the past, it looks like a lot of these workers were intended to return to South Korea once the construction process and the installation process are completed. So it's important to note that once the operation and the production of the batteries begin, these Korean companies probably probably would have hired a lot of the workers in the from the United States, but they need these skilled battery experts from South Korea in order to install this very highly sensitive and high-tech gears from South Korea to the United States to start this company, the factory up and running. So I think, but there are very few options for these workers who are on short-term business trips to seek, and that's the reality that has being exposed from this the latest raid that has led to the detainment of 300 South Korean nationals.
And Yu-kyung, it's also prompted a fair bit of anger in South Korea in reaction to these immigration raids.
Absolutely. So this has been one of the very few issues in South Korea that united the left and the right in the country to express the sense of anger and the sense of betrayal that's seeing what's happening in one of the key, military and security ally for decades. So it's the photos of these hundreds of South Korean nationals getting detained and shackled by the U.S. official have been on the front page of the newspaper this week. So this is this is probably unprecedented that South Korea, we here in South Korea see this type of immigration raid. This is and when a lot of people saw these photos, those people look just like the fellow Koreans who we see in this part of the world. And South Korea has also pledged billions of investments in the United States just 2 weeks ago when President Lee Jae-myung met with President Trump in the White House. So this has come at a time when at the time of the strengthening alliance between the two nations. So this has definitely saw big anger and the sense of betrayal from South Korea.
And it raises questions on the extent in which this might complicate U.S.-South Korea relations. Yu-kyung, thank you very much. Great to have you with us. Bloomberg's Yu-kyung Lee in Seoul. Some other global stories we're tracking. Brazil's President Luiz Inácio Lula da Silva has condemned the use of tariffs as a form of blackmail. This comes as Chinese President Xi Jinping warns that trade wars are disrupting the global economy. Both men made the comments during a BRICS summit held against the backdrop of President Trump's targeting of the bloc's members. The U.S. has imposed sanctions on a network of cyber scam centers operating in Southeast Asia. It's part of a push to pressure operations accused of using forced labor to defraud Americans of billions each year. The Treasury Department targeted 9 entities in Myanmar and 10 in Cambodia, where workers are allegedly forced to run virtual currency investment scams. The International Criminal Court has postponed a hearing on the confirmation of charges against former Philippine President Rodrigo Duterte. The court says the delay will allow sufficient time to determine whether he's fit to stand trial. Duterte faces charges linked to his anti-narcotics campaign, which left thousands dead. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how some key commodities are faring. Of course, after the weekend, OPEC Plus commitment to hike supplies come October relatively cautiously. We did see, though, markets kind of taking it in their stride and prices just a day ago a bit more elevated. For the moment, though, oil prices are holding steady. You're seeing WTI at around $62.50 as investors weigh the prospects for softening demand. And this is, of course, after Saudi Arabia cut pricing for most of its grades, really putting the demand outlook in focus. We're also tracking gold prices, which, of course, just a day ago hit a fresh record. This is following on from bets of the Fed cutting rates. Now, the next leg higher for gold is seen as potentially ETF buying. We're seeing the precious metal boosted by safe haven demand and what the Fed's trajectory is going to look like, holding out at $36.30 an ounce, Shery.
Yeah, we're watching the broader emerging market space as well because we have seen that upside following really U.S. stocks to record highs. We have seen emerging market currencies and stocks advancing on Monday, of course, expectations of that Fed rate cut that you mentioned. But we are following two currencies very closely. The Indonesian rupiah under pressure. Of course, the finance minister there was removed. So there is always that risk of capital flight, according to analysts. We're also following Argentina's dollar bonds and also the peso sinking after President Milei vowed no changes to his free market economic program despite a resounding election loss. Still, suffice it to say, Avril, that when it comes to the broader EM space, we have seen gains in recent weeks. Really, the narrative being that expectation of Fed rate cuts. Of course, that decision coming next week, and ahead of that, we have the Thursday CPI inflation data out of the U.S. The expectation is for a gain of 0.3% when it comes to the August consumer inflation numbers. We will be following that, and then we're headed towards the Fed meeting next week after, of course, that weak jobs data that we saw last week. So plenty of economic data to keep track. Not to mention that over here across Asia, we also have the likes of China's factory gate inflation numbers as well later in the week. Not to mention in South Korea, we get the jobless rate as well.
Yeah, and just a day ago, we saw in China that loss of momentum on trade numbers with exports coming in a little less optimistic than expected. But to your point about what's boosting emerging markets, it's also, as you say, partly to do with these Fed rate cut bets, but the idea that the tariff situation just isn't as bad as when we saw just after Liberation Day, Shery.
Yeah, and one stock that we've been following, especially given the tariff news, has been the Apple stock. Well, it's recently surged, adding nearly $430 billion in market value since late July. But with shares now near their highest level since February, investors may need more reasons to stay bullish. The company is expected to unveil its latest iPhone lineup, upgraded Apple Watch models, and a refreshed Vision Pro headset at Tuesday's product event. Bloomberg managing editor Mark Gurman joins us now for a preview, of course, the biggest annual event for Apple's launch of products. Are we expecting it to do the trick when it comes to the Apple stock price, or are we going to see some of that sell the news experience that we've seen in the past?
Yeah, well, first of all, my expectations for the event on Tuesday are the new iPhones, new AirPods, as well as new Apple Watches. I'm not anticipating the Vision Pro to be introduced Tuesday. That's something that I believe will come in October alongside some new Macs, iPads, etc. In terms of the stock price reaction, there's absolutely no way to know. People sell stock, buy stock for whatever reason. I certainly don't see people rushing to buy stock for what they see tomorrow, but who knows if they'll hold or what will happen. The stock market is, in my view, extremely unpredictable. And I think if I tell you, or if actually anyone tells you what's going to happen with the stock market, they're just making it up. So I don't know.
Yeah, I guess it's anyone's guess at this stage. But talk to us also about what's expected from this product lineup, with the iPhone revamp being a key focus and just being the first year out of this 3-year process of revamping the product, right?
That's what I can tell you with certainty. So you'll see the iPhone 17 Pro and Pro Max, as well as the iPhone 17 Air. That's going to be the new slimmed down iPhone. It's about 2 millimeters thinner than the current phones, a third thinner overall on paper. It's going to be hot. It's going to be nice. It's going to be innovative, but it's going to lack features like high-end battery life, high-end cameras, high-end performance. I personally don't think it's a phone anyone should buy. I think the Pro models, the Pro Max model, and the standard model of the iPhone 17 is a lot more practical. The other new products include the Apple Watches. You'll see a new Ultra 3, a new SE model, a new Series 11, as well as the new AirPods Pro 3 with heart rate monitoring. I think these are all going to be nice little peripherals and set Apple up well for the holiday season.
Mark, thanks for talking us through what to expect from the unveiling. Bloomberg managing editor Mark Gurman for us there. For more, let's bring in our next guest. Carolina Milanesi is president at Creative Strategies. Carolina, great to see you. So we have Mark saying, the iPhone Air, maybe not something you should pick up, but what is your sense of the potential for this new lineup to help Apple's growth and bottom line?
I think from a device design perspective, always Apple gets the most interest from consumers when they really radically change design. So I think at a minimum, the iPhone Air is going to get people into stores to see what it looks like. And then they might not settle on it, but they might look either at the 17 or the Pro and Pro Max. But certainly is going to captivate people's attention and get them interested in the whole portfolio. Whether or not is a phone to buy, I think we really need to look at the features tomorrow and see how much the thin design is going to compromise on features or not.
We're going to be watching the price tag as well. I mean, what are you going to be paying attention to, and how difficult it is potentially to separate potentially a higher price tag, whether it comes from because of these tech upgrades or because of tariffs?
Absolutely. That is something that consumers will very closely monitor. How much more expensive are these models going to be versus last year? And as you point out, it's really hard to, from a device like the Air, to figure out how much is just the cost of making something that thin versus the impact of the tariffs. So far, Apple has been pretty good at not layering on consumer the cost of the tariffs, but it's been pretty considerable over the past couple of quarters. So we'll see. It's obviously a time where Apple is feeling maybe a little bit more of a competition than it has done in previous year, not because of consumer asking necessarily for Apple Intelligence to be ready now and have the new Siri now, but just from just the general discourse that is putting Apple as the company that needs to catch up. Whether or not that is true is really going to be all done and seen in the sales.
Yeah, Carolina, tell us a little bit about the progress that Apple has made in artificial intelligence, because last year I actually refrained from upgrading my iPhone because I thought we were going to get better, tools related to AI this year. Is that going to be the case, and could that sway consumers?
I think we're seeing at WWDC, which was the developer conference in June, that Apple started to talk more and more about really having AI as the underlying power, if you like, of their hardware and their software. And one thing that Apple does very well is really cascading down features from a software perspective to previous model, as long as the chipset obviously are able of powering the intelligence. And I think from a consumer perspective, if they are going to get excited about the hardware, there is somewhat of a peace of mind that if they upgrade now, they will be able to reap the benefit of Apple Intelligence once Apple is ready to fully unleash the new Siri. Other than that, you're going to continue to hear Apple talk about the different features, especially around the things that consumers really care about, like the camera.
And what about other products such as AirPods, Apple Watches as well? How much do they contribute to Apple's bottom line, and how important are they in the broader ecosystem strategy here?
They're really important for two reasons. First of all, they drive a lot of volume, and so there is a contribution to the bottom line. The other part that is really very valuable for Apple is that they tie consumers into the Apple ecosystem more, and they offer them the ability to actually show the potential of AI across products. So having products that work better together to deliver a more in-depth AI goodness, if you like, that will come from owning more products. And those are the consumers that then are going to, not never, but very hardly move to a different ecosystem like Android.
Carolina Milanesi, good to have you with us, president at Creative Strategies, with her views on, of course, Apple products and the product launch coming up. We have more ahead on the Asia trade. This is Bloomberg.
Here's the latest from the corporate front. Chinese EV giant BYD is ramping up its European expansion, unveiling new models and opening more showrooms as it seeks to offset a bruising price war at home. The company expects to operate more than 1,000 stores across 32 countries in the region by the end of the year. BYD has also expanded its European lineup to 13 models, more than double the 6 it offered 2 years ago. Rupert Murdoch's family has settled its trust dispute, cementing Lachlan Murdoch's control over Fox and News Corp. The deal ends a years-long legal battle and gives Lachlan sole authority. He's already CEO of Fox and chairman of News Corp. Siblings Prudence, Elizabeth, and James will exit the trust and receive around $1.4 billion from stock sales. A new holding company controlled by Lachlan will now own the family's voting shares.
Avril, the Japanese yen currently trading at that 147 level, rebounding a little bit from those losses that we saw after Prime Minister Ishiba announced his resignation. It's interesting because the yen is about 10%, 11% cheaper than its 5-year average. And what that means is that some of these companies here in Japan are now cheaper for foreign buyers. So Japan is likely to see a record number of attempts by foreign companies to buy domestic firms this year. We're talking about foreign firms making 157 proposals to buy or also acquire majority stakes in Japanese companies as of the end of August. Now, that could exceed last year's record of 193 if this trend continues. And it's not just that, right? It's also because the government has changed some guidelines for companies to give more sincere consideration to takeover offers as well.
Yeah, and Japanese companies overall seem to be abandoning some of their takeover defenses. It is worth noting, though, that not all these attempts have managed to have been pushed through. Remember the high-profile $46 billion deal that didn't come to fruition of Alimentation Couche-Tard's takeover of 7&I. But we're also going to be tracking some of the stocks to watch when trade opens in Australia, Korea, and Japan shortly. Chip giants in Korea may move after the U.S. proposed annual approvals for exports of chip-making supplies to Samsung and SK Hynix's factories in China. It's a compromise aimed at preventing disruptions to the global electronics industry after Trump officials revoked Biden-era waivers that let the companies more easily get such shipments. And over in Australia, ANZ in focus after the bank announced plans to cut 3,500 employees within the next year. And this is, of course, part of a wide-ranging revamp under its new CEO. ANZ also plans to reduce engagements with consultants and other third parties, which will impact around 1,000 contractors. We'll watch the markets open next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens and watching fiscal concerns and political uncertainty around the world. April, here in Japan, we're headed towards a leadership election. Over in France, the prime minister just lost a confidence vote. And in Indonesia, the finance minister being removed. So investors have plenty to watch.
Yeah, and we're going to be continuing to keep tabs on the long end of these yield curves. Remember as well how in Japan it is among the steepest that we're seeing among major markets, Shery.
Yeah, with expectations of the BOJ rate hike being pushed further away, we continue to watch JGB yields. We do have a 5-year auction tomorrow, not to mention 20 and 40-year auctions also in the following weeks. But take a look at how the equity markets are also coming up, because we have seen them gain to a 3-week high. This, of course, as we continue to see weakness on the Japanese yen against the U.S. dollar after the announcement of the resignation of Prime Minister Ishiba. Right now, we're seeing a little bit of a rebound in the Japanese yen, in fact, clawing back most of that loss that we saw after that announcement. And you can see Nikkei stocks now gaining 0.7% early at the open right now. The 10-year yield holding at that 155 level. But as you said, really, Avril, it's about the steepest yield curves among major developed economies over here in Japan. Take a look at how Korea is also coming online, because we had seen broad gains for the Kospi as well. In fact, when it comes to the MSCI Asia Pacific, we're around 4-year highs already. You can see the Kospi gaining 0.4%, and the Korean won holding steady. It's really been trading sideways at that 1386 level. Of course, really weakness on the US dollar has been also a key theme across Asian markets.
And it's interesting, Shery, take a look at the open in Australia, maybe a bit of an outlier, and declines on stocks there for a second day. Remember, the energy names, they were the ones in focus just a day ago and put pressure on the benchmark overall. Among the stocks we'll be tracking in the Australian markets include ANZ after this talk about 3,500 job cuts. But for the moment, looking at the Aussie dollar picking up towards 66 US cents, keeping an eye on the 10-year in the US as well at that 404 level on yield, Shery.
Let's bring in Asia as Aisa, Ogoshi APAC Equities Portfolio Manager at JPMorgan Asset Management. Aisa, really good to have you here in our brand new Tokyo studio. Let's talk a little bit about Japan, because of course, we have seen really equities continue to gain ground. 3 weeks high, despite the fact that we are facing political uncertainty. Could we still go higher from here?
Yes, I think I'd like to start with the, now we have clarity on the U.S. tariff issue. This is not just about Japan, but all across the region, so that's a positive. Despite political noise, we continue to see further improvements in corporate governance reforms. In Japan's case, it started as a top-down initiative. Now we're seeing much, much more bottom-up cases emerging, and this will continue. And also, lastly, the wage hike. Inflation, the virtual cycle is continuing. Again, that's a very positive sign for Japanese economy and markets.
Yeah, we have seen really positive signs, even with the second quarter GDP numbers yesterday surprising to the upside. And yet we are now seeing these expectations of a delay in the rate hike from the Bank of Japan. What are the implications for the markets?
Well, I think some aspect of the rate hike is already priced in especially in the financial sector names. So in that sense, again, the political noise is impacting the timing, but we still see the direction is intact.
Is the Japanese yen right now being moved by the weakness of the U.S. dollar, given what the Fed could do? Because right now it looks like we're trading sideways. We're even recouping some of those losses after the resignation announcement.
So the direction of the yen does remain a big focus for a lot of investors. We are expecting U.S. dollar to weaken, but that doesn't necessarily mean the yen can strengthen straight away. I think one aspect that we see is that the Japanese local investors, their investment towards foreign assets is still very strong, and that's one factor that's keeping the yen weak.
I wonder if you could weigh in as well, as we see higher yields, particularly on the long end in Japan. Do you see that prompting some repatriation of funds?
So far, I can't say that we are seeing a big trend of repatriation. But again, I think everybody's focusing on the yen direction, and this is one of the, in terms of equities and both fixed income markets.
Aisa, what about South Korea? Because we are seeing some overhang there in relation to immigration raids on South Korean companies and their operations in the U.S. How much are you assessing that as a potential risk for South Korean equities that have been doing pretty well, all things considered, this year?
Yes, so the most recent incident we consider is a hiccup in the grand scheme of things. Again, as I mentioned, the clarity that we are now getting in terms of the tariffs, the levels and the direction, I think helps in terms of investor sentiment. Korea, on top of that, is pursuing the value-up strategy. So the market reform forces are intact. We saw the commercial code revision already passed. We're now expecting more to come in terms of market reforms, such as treasury share cancellation. So we see it as a positive, and we're very much bullish on Korean equities.
Is that a short-term or more of a long-term story? Because when I bring up the value-up program, for example, and compare it perhaps to Japan, where corporate reforms have been happening already for many years, right? They say that this is very early in South Korea. Is this a time to get into that market, or should we wait it out a few more years until this consolidates?
So this is very much a long-term topic, as you mentioned. And as we have seen in Japan, what started as a top-down initiative is now spreading as a bottom-up. Company strategies, company management really grasping this idea of corporate governance improvement. And we expect to see that in Korea as well. So our stance is to, of course, we need to keep watching the progress, but so far has been encouraging.
And South Korea, of course, has tech heavyweights related to artificial intelligence and that boom, right? How big of a mover is that trend right now across Asian markets, especially even China, perhaps, because we have the likes of optimism over DeepSeek, not to mention their own semiconductor makers?
Yes, so as you mentioned, Korea is a big player in memory markets. The top memory producers are still key players in the AI hardware sector. This is an area where the Chinese players are still not able to catch up. So they will remain in that positive AI, spending beneficiary.
How much conviction do you have about this Chinese rally that, for the most part, has been driven by tech?
Yes, so in case of China, we do see the positive sentiment building or actually, continuing. Hong Kong, China together. For example, in Hong Kong, we're seeing the IPO pipeline is now at peak level, so it's surpassed the 2021 past peak. And in terms of A shares, whenever the sentiment is weak, we do see concerted effort from the state and regulators to support the market. So in that sense, we see the sentiment is positive, is there. And what we're also starting to see is maybe some signs of wealth effect in the China domestic consumption. So these could be spotted in areas like leisure travel. For example, some of the Macau gaming numbers that over the past months have been quite encouraging.
Aisa, thank you for sharing what your calls are on these Asia stocks with us. Aisa Ogoshi is APEC Equities Portfolio Manager at JPMorgan Asset Management. And just as we've been talking about these Chinese stocks, it's really quite remarkable given how it's been climbing in the face of U.S.-China rivalry. We've also been unpacking how the U.S. is mulling annual China chip supply permits for Samsung, for SK Hynix, and this is seen as a sort of compromise against the backdrop of these revoking of waivers for shipments to China. Taking a look at these chip names, they are a little green in trade. Among the movers we're watching in the session as well, ANZ following word of their plans that they're going to be cutting jobs to the tune of 3,500. We did see, I think, an initial gain in the share price of the lender, but we are pulling lower at the moment, Shery.
Right, Avril, later this hour, former Japanese Minister Kono Taro joins us to unpack the political dynamics here in Tokyo as Prime Minister Shigeru Ishiba prepares to leave office. So do join us for that conversation. More ahead on the Asia trade. This is Bloomberg.
Indonesian President Prabowo Subianto has replaced Sri Mulyani Indrawati as finance minister, risking renewed market turmoil. Our Southeast Asia global business reporter Faris Mokhtar has been tracking all the developments. And Faris, you were outlining for us earlier that this came as a sort of surprise. But talk us through the why. Why did the cabinet reshuffle happen? Why was the finance minister replaced?
Now, a key trigger for this is clearly the protest, the deadly protest that left several people dead, not just in the capital city, Jakarta, but the other parts of Indonesia as they voiced grievances over the extravagant lifestyles of the political elites, the rising cost of living, stagnant wages, loss of jobs. And so what happened after that is this reshuffle, which, like you pointed out, came as a surprise. Now, the reason for this is for President Prabowo Subianto, who is soon marking his first year as leader of Southeast Asia's largest economy, to boost his standing domestically, to boost his credibility, to show to the Indonesian public that he is listening, he is taking action, and he is changing course in some ways.
Yeah, and Indrawati was seen as a symbol of stability, right? So what can we expect from the new finance minister? What will he need to do first?
Now, before I go to the new finance minister, Indrawati's removal or replacement from the cabinet came as a big shock. Now, notwithstanding the fact that even at the start of this year, there have been speculations, there have been rumors about her wanting to step down, but the removal or the replacement of the previous finance minister, still came as a shock because, like you rightly pointed out, she's seen as the guardian in terms of fiscal discipline. Now, when it comes to the new finance minister, Purbaya, he is seen as not having the same international standing as the former finance minister, but domestically, he does have some standing within the establishment. He is a trained economist. He has worked for a senior minister who was arguably the most effective minister under the previous President Jokowi administration. He shared with reporters trying to assure the public and the markets yesterday after his appointment that he knows the markets, he understands the markets, and he's trying to convince the markets that he could be the one steering Indonesia to growth.
Faris, how is all of this likely to be received by investors? I mean, we saw last week the way that authorities sort of managed the fallout in markets was quite remarkable. What are we expecting with these latest developments?
Now, as you rightly pointed out, what happened 2 weeks ago, that unnerved investors. But if we put everything into context, it has been a tenuous, chaotic tenure for President Prabowo Subianto since he was sworn in October last year. And you see a series of events happening even, from the start of this year in January up till the protest. And the whole chain of events, the big picture, has unnerved investors. And the sudden cabinet reshuffle is adding to the jitters. Now, what the president is trying to show that he is adapting, he's trying to change course, he's trying to course correct. But at the same time, the markets are still not convinced. Investors are still not convinced. The investment landscape so far has been subdued. And now with this new finance minister, there will be greater scrutiny on the president, his finance minister, and his government going forward. The question is, can the current administration live up to its promises, or it's all talk?
And it's a very difficult situation for the government, right? On the one hand, you want to appease the public, but at the same time, you have global investors really and the capital outflows being a big concern for this market. How important will it be for the new government and the finance minister to be able to adjust some of those fiscal plans to soothe both sides?
The biggest test is really finding that balance, and it's rather tricky because on one hand you have a president with ambitious plans and his policies require a lot of spending, but at the same time Indonesia has set precedence in managing its budget deficit at a lower rate, managing borrowing, managing debt very, very well under the previous finance minister. So the biggest task for the new finance minister is really safeguarding that fiscal discipline, but at the same time stirring domestic consumption, but at the same time also creating jobs, generating the economy to the point that it can finally grow past that 5% mark. Now, if you recall, Indonesia's economy has basically stood at 5%. It is better than the other countries, including in Southeast Asia, but the goal is that given the size, given the potential of Southeast Asia's largest economy, the aim has always been to grow it to past 5%. Now, with the changes, I think there will be expectations from both the markets, investors, the business and finance community, whether Indonesia can truly live up to its potential.
Faris, at the same time, even with Prabowo moving to perhaps quell some of these worries, we are seeing these underlying tensions, concerns about income inequality. Talk us through what we're seeing on the ground in Indonesia.
It is really quite somber. It is really very, disparate compared to the extravagant lifestyles led by the political elites, which became a flashpoint. What you are seeing, economically is that consumption has been dropping. Domestic consumption has been on the decline. What you're seeing in the workforce, for example, 60% of the people are in formal sectors. That is a staggering figure. And if you look at the full-time workforce, less than 10% are graduates. What's been happening over the past decade is that you've seen Indonesia's GDP per capita risen. If you are in Jakarta now is not what Jakarta was before the pandemic even. It is really a bustling metropolis, and it is really attractive for foreign investors. But if you also look at the other statistics, wages have been stagnating. We have seen tens of thousands of job losses. So what the people are feeling on the ground is that on one hand, you have figures like GDP per capita going up, you are seeing commodity boom, you are seeing politicians living in luxury. But the question for the masses is that, but what's left for us? How come we are not able to climb up the ladder and enjoy the gains that the government has gained? So that is what's happening on the ground. And, the issues of rising costs, the issue of stagnant wages, job losses, the ability for graduates to find jobs, those are really key issues. And as of now, the president and his administration haven't really laid out clear plans. How are you going to generate economic activity? How are you going to create more jobs? What are you going to do to upskill workers so that they get higher wages? Those plans are still unclear.
Faris Mokhtar, really great to get your insights. Bloomberg Southeast Asia global business reporter with a deep dive into the economic situation and political situation over in Indonesia. And also, we're seeing uncertainty over in France. President Emmanuel Macron is set to appoint a new prime minister soon to tackle the country's debt problems after Francois Bayrou's resignation. Bloomberg's Oliver Crook reports from the National Assembly in Paris.
As the session concludes here at the National Assembly in Paris, so too concludes the fourth French government in the last 2 years, underlining the fragmented politics of France and the difficulty of the next prime minister to try to pass a budget for 2026, who will be appointed in the coming days by President Emmanuel Macron. In his opening remarks, Prime Minister Francois Bayrou told lawmakers who were voting on his government today that they could topple the government, but they could not ignore reality. And that reality is a France that has not had a balanced budget in 51 years, a debt-to-GDP ratio which has reached 115%, and a deficit-to-GDP ratio which is the third worst in all of the European Union. It is a downfall that the markets have taken in relative stride, an event that was more or less priced in since the no-confidence vote was called, but it underlines yet another European government government struggling with fragmented politics and an inability to pass a budget. We've seen similar stories across Germany, Spain, the United Kingdom, as well as the Netherlands. And it is coming at a time for the European Union struggling with competitiveness, with a rising China and a more hostile United States in its ambition to try to remain a global power.
Bloomberg's Oliver Cook at the National Assembly in Paris. Let's take a look at how Europe futures are faring against the backdrop of this French political turmoil. No good options for Macron on the next prime minister. No strong sense of how the government is going to be able to bring down the budget deficit and balance public finances. But the reaction in markets has been quite subdued. We're seeing Euro Stoxx 50 futures for the moment pointing to some declines. Euro, slight tick up against the greenback. Of course, balance this against the backdrop of what the Fed could do, or at least what investors are betting the Fed could do. Seeing the British pound also climbing a little. We had some of our strategists also highlighting that when it comes to the Euro area, there is a sense that markets could be underpricing the risk given everything that's happening. Some of the top global stories we're following as well. Brazil's President Luiz Inácio Lula da Silva has condemned the use of tariffs as a form of blackmail. This comes as Chinese President Xi Jinping warns that trade wars are disrupting the global economy. Both men made the comments during a BRICS summit held against the backdrop of President Trump's targeting of the bloc's members. The U.S. has imposed sanctions on a network of cyber scam centers operating in Southeast Asia. It's part of a push to pressure operations accused of using forced labor to defraud Americans of billions each year. The Treasury Department targeted 9 entities in Myanmar and 10 in Cambodia, where workers are allegedly forced to run virtual currency investment scams. More ahead on the Asia trade. This is Bloomberg. Now, one story we've been tracking as well, the Rupert Murdoch family and how it has settled its trust dispute, cementing Lachlan Murdoch's control over Fox and News Corp, and the deal ends a years-long legal battle. Bloomberg's Chris Palmieri joins us now. So, Chris, does this help to end some of the speculation about the future direction of the company? Talk us through what we're seeing in the settlement of this legal fight.
Yeah, it ends it forever, basically. Lachlan Murdoch is now officially in control. There's no longer any dispute of that, potentially from his other siblings.
And what is your sense of what direction the company is going to take?
Well, Lachlan has been in charge for the last few years, and you can already see his work. I mean, both News Corp and Fox have hit highs recently. They sold off the entertainment businesses of Fox to Disney and focused on news and sports, and that strategy has been working.
The legal battle started a while ago. So what does this really mean for the company and the direction moving forward?
Well, you actually saw the stock dip a little bit, I guess, because there's no longer speculation that they'll be taken over. Lachlan Murdoch is 54, and his father is 94. So if he lives as long as his dad, he could be running this for another 40 years.
Bloomberg's Chris Palmieri, good to have you with us, joining us from Los Angeles. We have more on the Asia trade. This is Bloomberg.
Now, we have some data crossing the terminal as well in terms of consumer confidence in Australia. This is the Westpac gauge. We're seeing it declining by 3.1%. This is versus the prior reading of an increase of 5.7%. So here, the reading at 95.4 indicates that still pessimists outweigh the optimists in terms of consumer confidence down under. And this is kind of going against the grain of the prior reading, following on from the optimism that this long period of pessimism could finally be coming to an end and consumers potentially being less anxious about their finances. But once again, this is what we're seeing on the Westpac consumer confidence gauge that's fallen to 95.4. Aussie dollar holding out at the 66 US cents level. Now, also in Australia, we've been seeing this long-standing debate over immigration that's been reignited recently after anti-immigration protests swept across major cities, some hijacked by neo-Nazi voices. And those protests were met with counter-demonstrations, and Prime Minister Anthony Albanese has called for calm, but the rallies have exposed deep divisions in a nation built on multicultural roots. For more, let's bring in Bloomberg's Paul Allen and our next guest, Anna Boucher. She is an associate professor in public policy and comparative politics at the University of Sydney. Paul, let's maybe start with you first. What are we seeing recently in terms of these anti-immigration protests down under?
Well, Avril, nothing particularly new. We have seen it before in recent history. About 10 years ago, we've seen immigration protests, and about 20 years ago as well, there were the well-known Cronulla riots, which all focused on exactly this type of thing. So it's not totally unfamiliar, but it's always disturbing when it does happen. Now, as you mentioned there, the Prime Minister Anthony Albanese has been downplaying this, but one concerning aspect of this is, well, the quite brazen appearance almost of neo-Nazi groups as well, and that's really adding an extra degree of concern to what we've been seeing with some of these protests. Let's get to Anna Boucher now for some of her insight here. I just want to start, Anna, if I can. If you can give us an overview of what the statistics are saying. What are the actual arrival numbers saying about immigration into Australia? Is it increasing, and what sorts of countries are migrants coming from?
Immigration has actually gone down in the last financial year. The net overseas migration is at about 340,000. Some of these groups have cited arrival statistics, but government, for instance, the Australian Bureau of Statistics is saying you shouldn't rely on those because they don't factor in the exit numbers. So anyone who spends any time at Sydney or Melbourne Airport will know we have a lot of people coming in and a lot of people going out. What we need to look at is the net overseas migration. 340, it is down from the prior year, and that's largely as a result of government policy, particularly in the area of international student migration.
So if you say numbers are actually declining, what is spurring these protests? I mean, we've seen them occur more than once over recent weeks. Anthony Albanese, the Prime Minister, is downplaying the numbers. So is it a small group, nothing to worry about, or is it a sign that something deeper and more troubling might be brewing?
It's not that small. It's 15,000 people across Australia and protests in all major cities. Look, I think people are concerned about the cost of living. People are concerned about infrastructure, whether it's sufficient, and migration becomes an easy thing to blame for those pressures. Actually, those issues are very complex and multifaceted in their sources, but often people are looking for easy solutions and easy scapegoats, and immigration provides one to a lot of those protesters, and I think that's what's explaining it. Also, generally, we've had an increase in social movements and protest behaviour in Australia over the last few years, and so potentially these groups are thinking this is also a way that they can engage in policy change. Whether that will occur or not is to be seen.
What do you think should be the institutional response and potential tightening up in response to what we're seeing there?
by tightening up, you mean, of the migration program.
Institutional responses to some of these anti-immigration protests that we're seeing, how do you think the administration can perhaps mitigate that development?
Well, people have a right to protest. And I mean, it was the same with the pro-Palestinian protests. There is a right to protest in Australia. Obviously, the law needs to be applied if the protests become violent, if hate speech is occurring at the protests, then there needs to be natural limits upon those protests. But people have a right to have their views, irrespective of whether we disagree with them or not. I also think the Prime Minister made the point that it's important not to allow protesters to be further ostracised or pushed into a further radical behaviour. So were you to quash these protests entirely and not allow people to have their views, there is a risk of further radicalisation, and we don't want that. So it's obviously a delicate balancing act for government. They need to ensure that there aren't riots, that there isn't hate speech occurring, which can be difficult to police. But at the same time, if they were to close it down entirely, there would be, I think, other risks that could arise.
Yeah. Professor, how much clarity is the government actually providing on its migration program, you think?
I think the government's quite clear. The problem is it's not that easy to explain. I mean, migration statistics are complex, but anyone who follows the news closely will see that the government has said on multiple occasions that net overseas migration is down, that they have tried to put caps in place for student migration. So I think that they are attempting to do that. The problem is that there is complexity with regards to the data, and that could be part of the communication issue. Also, we know this from social research, people will believe what they want to believe. So if there is an underlying bias or belief system, that could be quite hard to challenge even with empirical data. The third thing I would say is that we need to hear more positive stories about migration and multiculturalism. And that is something where I think we can have more work can be done on intercultural dialogue, on the benefits of migration. That communication story could come out even stronger, and that may assist somewhat.
This issue is also tied into another issue that concerns many in Australia, and that is housing prices and the housing shortage as well. And recent RBA analysis, Reserve Bank of Australia analysis, has shown that the housing market is under pressure from the numbers of international students in the country. Now, on the one hand, education is such an important source of revenue for Australia. It's the fourth largest export. But on the other, it does create these pressures on the housing market. So how do you get this balance right, and is it right at the moment?
Well, there's different studies that have been done, and I personally haven't read a conclusive study that says that the housing market is the issues in the housing market are primarily being driven by migration. There's other studies that, for instance, suggest there's no correlation. But one thing that can be done, which was also mandated, I think 2 years ago by the government, is to require universities to increase their rate of university housing supply. So there is housing for international students. That's one option. Diversification of where international students are located, which has been part of the reforms that the government attempted in the prior administration. Is another option. So, for instance, more accommodation in regional areas is another way that can be dealt with. And obviously increasing the rate of construction and production of new housing, including densification in cities, which would mean more people living in apartments, but would obviously increase the housing stock as well. So I think there's a few different options that are available.
Well, also more broadly, like a lot of developed nations, Australia's got a birth rate that's below replacement. It's got a skills shortage as well. It's got an ageing population also. So are current migration settings enough to address all of those problems, particularly the skills shortage?
No, of course not. I mean, no country in the world is going to deal with ageing population just through migration, because especially if the migration is permanent, migrants also age. So that's the first point. The second point is with skills shortage, yes, skilled migration and even semi-skilled migration is an important component of addressing skills shortages. And with the new data we have coming through Jobs and Skills Australia, it's clear that migration will be part of that puzzle. But we also need to ensure that we upskill Australian workers, that there is more support for those going into the skilled trades, for instance, and that is an area where the government has done work, but obviously it will be slow. It takes time to train up people, and we really need the workers as soon as possible. So migration, I always say, is part of the puzzle, but it is not the only solution to these complex social problems.
It is complicated, as you say. Really good to get your insights. We really appreciate it. Anna Boucher is Associate Professor at the University of Sydney. And, of course, thanks to our very own Paul Allen. We have more on Australia ahead every Tuesday. Plus, you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com. And coming up as well, former Japanese Foreign Minister Kono Taro joins us to unpack the political dynamics in Tokyo as outgoing Prime Minister Shigeru Ishiba prepares to leave office. This is Bloomberg.
There's, I think, a profound sense that the party is completely out of touch with voters.
I'm looking at a bunch of weak prime ministerships continuing on into the future.
Prime Minister Ishiba, who's now stepping down, one of his sort of signature achievements, I think, while he's been in office, was his astute management of relations with the opposition. And whoever the party selects now to replace him is probably going to have to draw on that expertise.
Some of our guests on Bloomberg TV on Japan's leadership struggle, and we're watching who could become the next prime minister of Japan. But whoever becomes the next prime minister, we'll be watching Japan's yield curve, which is already the steepest among major markets. Of course, there's this 30-year yield continuing to jump, further widening the spread versus 5-year debt. This has already topped well beyond what's currently seen in other major markets. In today's session, though, we are seeing long end and short end yields losing ground at the moment. But of course, this is a continuing trend, mostly because of inflation concerns and fiscal concerns as well. Let's discuss the Japanese economy and broader political landscape. Joining us now is Kono Taro, who previously served as Japan's foreign affairs minister and most recently as digital transformation minister as well. Always great to have you. And this time in our brand new Tokyo studio. So thank you so much for coming in.
Thank you very much.
I was talking about the yield curve here in Japan. And of course, a big part of that is the expectation that the Bank of Japan will have to delay its rate hike. You wanted to see those rate hikes come faster. Will this be a problem for the Japanese economy and the broader public?
Yes. If the Bank of Japan delay the rate increase, I think it will mean inflation will continue. Everything we import will be higher. And then we have a LDP leadership election. And all the opposition parties wants to increase spending, the government spending, meaning the government deficit will be bigger. And that has very negative implication to the Japanese economy, I believe. So this is kind of serious moment.
Already we saw the LDP's really election defeat in July and also last year because of these cost of living concerns. How is the Japanese public doing, and what does the next prime minister need to do?
Well, I strongly believe we need to fix yen rate. So in order to do that, Bank of Japan need to increase the interest rate. I think that's the core of the problem. But instead of doing that, the Japanese politics has been trying to give out the benefit to the household. It doesn't work, and it just simply increases the government deficit, and that would further speed up the inflation. So what we have been doing is wrong, and I think we need to go back to the core of this problem, which is low interest rate. And the way we are trying to handle and the way the Prime Minister is leaving his office may work against that. So that's what I'm very strongly worried about.
So you don't agree with the cash handouts or even the sales tax cuts that are being proposed now?
Well, sales cut will definitely increase government deficit. And the handout, there's no way we can tell who's in trouble, who is not. So when we do the cash handout, we simply just give out to everybody, and many of them goes to simply their bank account. So it's not helping, and it just increasing government expenditure, government deficit. So we need to do something different, and the opposition don't agree with that. So that whoever becomes the next LDP leader need at least one opposition party supporting coalition or each policy. So, and every opposition want more expenditure. So that means the Japanese budget situation could get worse.
Will you be running for the LDP election?
I'm sleeping on it.
You're still sleeping on it. Is there a risk right now that we could see this revolving door of prime ministers, given, of course, also the weakened position of the LDP?
Yes, LDP lost the majority in both houses. That's why the prime minister is leaving office. And whatever we do, we still need at least one opposition party supporting our budget or the bill. So the new prime minister will be in a very weak position unless at least one opposition party decided to join the coalition. Then we could secure the majority, and then we can do more stable policies.
Given what we saw from the July elections, how much of an identity crisis is the LDP in right now? Given that you need to also choose between wooing right-wing voters to also trying to portray a perhaps fresher image, given, of course, the old party politics image that the LDP still has with the public?
Well, I think our situation is something like American Republican Party with Tea Party movement. There's very noisy minority coming from the right, and some part of our LDP sort of veer to the right. But I think that is wrong. I think we always try to be catch-all party. So LDP need to be sitting in the center, or at least center right. So there's going to be a party struggle. Excuse me. Between the extreme right wing or center right. And I think the way forward should be LDP going back to the center right.
Is it problematic that we saw the rise of these far-right groups like Sanseito, for example, that are anti-immigration at a time when, of course, Japan faces the challenges of shrinking and aging population as well?
Well, because our population is shrinking, we definitely need foreign people coming into Japan as a workforce. But we really need to have a very strict rule for the work permit. And in the past, I think we didn't implement the rules correctly. And that's why there were some foreign people coming in illegally, working in Japan illegally. And we didn't take necessary measures. And people see that, and people have some fear in those people, those number going up. That led to the rise of Sanseito or anti-immigration feeling. So what we need to do is we set the policy and we implement those policy for foreign workforce strictly. And that way people have some sense of stability. And those who are working in Japan according to the rule, they should be welcome and they should be taken care of.
Immigration, such a big issue around the world, right? Let me turn briefly to the United States, because what we have seen these ICE raids when it comes to Hyundai, LG factories as well. I want to bring the conversation into trade negotiations, into investments into the United States. Do you see those as problematic when Japan also has an agreement with the U.S. to invest hundreds of billions of dollars when you don't have clarity over the investment parameters and how freely you can operate in that country?
Well, this tariff issue, I mean, it came down from 25 to 15, so people feel this has been solved, but it's actually going up from 2 point something to 15%. So this tariff issue is wrong to begin with. And on top of that, we don't exactly know what's going to happen There are some talks about Japan investing in Alaskan gas and oil, but I'm not sure if that is economically feasible. So there are a lot of things still not clear. So we really should be talking to the people what has been agreed, and we still are not sure. So I think there are a lot more things to do. That's why the Prime Minister didn't resign the night of the upper house election, even we lost the majority. The Prime Minister tried to take care of this issue, and now we are ready to sign a joint statement. And that's why Prime Minister is leaving the office. But we are still not clear exactly what's going to happen. And even we sign a joint statement, we still don't know.
Could this uncertainty threaten the Japan-U.S. alliance?
It could. It could. That's what I'm worried about. The situation in East Asia, economically or in terms of security, it's unstable. And U.S.-Japan alliance supposed to be the cornerstone of the stability in East Asia. This U.S.-Japan security treaty is public goods for the region, not just for two countries. But now the base of that, the political relationship, is a bit unclear, and I'm very worried about the situation.
Kono Taro, always great to have you in our Tokyo studio. He's a former Japanese Foreign Affairs Minister. Of course, he's held other cabinet positions as well, including the Digital Transformation Minister most recently. We have more ahead on the Asia trade. This is Bloomberg.
And as we track what's happening domestically in Japanese politics, we're also looking at the Nikkei climbing past the key 44,000 level. And of course, this is against the backdrop of a fourth day of advance, partly to do with stabilizing sentiment surrounding Ishiba's decision to step down, but also against the backdrop of Fed rate cut bets that have driven what we're seeing overall in Japanese stocks. So tracking what we're seeing in U.S. shares closing to that all-time highs. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China Show is next. This is Bloomberg.